Hey there, students. My name is Nathan, and I am a Chegg tutor. Today we're going to be talking about overhead allocation used in job costing. Now, job costing basically is any type of unique job that needs to be accounted for separately. A good example would be like building a home. So every home that's custom built has its own needs for the job, its own materials, own labor, and overhead. Now today in this video we're going to talk about just how to allocate overhead in job costing. There's a method that's used. Now I came up with a 5-step approach that helps a lot of my students allocate overhead in job costing. So on the left side here I'll talk about my approach. And on the right side, we'll go through a practice problem. So on the left side here, we're going to start with step 1 for allocating overhead. The very first step I came up with is to identify your overhead allocation base. Now, in all my years of teaching, going through many exam questions, I've only seen 3 allocation bases being used. Either direct labor hours, machine hours, or direct labor cost. Haven't seen any others. So we're just going to focus on these 3. Now once again, it's either one of them. So it's not all 3, it's just one out of the 3. So that's the very first step when you attack a problem. Find out what the allocation base they're using. Now on the second step here, you're going to calculate your predetermined overhead rate. Now that word predetermined means estimate. So anytime you see the word estimate in a problem, they're referring to the predetermined rate. The way you calculate that is you take your estimated overhead cost divided by the estimated allocation base. Once again, that's the allocation base that you identified in step 1. So this is step 2 here, calculating your predetermined overhead rate. Sometimes they call it your estimated overhead rate. That's another name for it. Also, another name for allocated overhead is applied overhead and assigned overhead. So there's 3 different names for the same thing. I'm just using allocated overhead in this example. So on step 2, once again, you calculate your predetermined overhead rate. From there, step 3, you'll calculate your allocated overhead. Or once again, another name for that is applied overhead. So you take your predetermined rate that you calculated on step 2, and you multiply it times your actual allocation base. Now notice it says actual, not estimated, actual. So on step 2, you use the estimated base to get the rate, and then you apply it using the actual base. Then, on step 4 here, what is the overhead variance? Well, the variance is just the difference between 2 things. In this example, you're trying to get the difference between actual overhead and allocated. That's your overhead variance. So if your allocated overhead is greater than your actual overhead, it's considered overallocated, right? Because you overallocated it. Allocated was more than actual. And the opposite is true as well. If allocated overhead is less than actual, it's underallocated. You underallocated it. Very important to know these differences here. So that's step 4, getting your overhead variance. Then lastly on step 5, does your cost of goods sold need to be adjusted? So if you end up with overallocated overhead on step 4, you would subtract that from cost of goods sold. If you ended up with underallocated overhead, you would add that to cost of goods sold. Now these are my 5 steps I came up with. All my students find it really easy to calculate overhead if you just follow these 5 steps. Now make sure you don't miss them though. Each step is really important. So we're going to go ahead and reference these steps as we practice a problem right over here. So Jensen Co. has $200,000 in estimated overhead costs planned for the year 2015. They specialize in building homes, so they feel direct labor hours drive overhead. They plan to have 80,000 hours of direct labor and machine hours of 32,000 for 2015. That's for the full year. Now for Job 101, they're currently being built in March, has 2,400 direct labor hours and estimates 22,000 in cost of goods sold. So again, they're building homes. So Job 101, that's just one specific home that they're building. Actual overhead for Job 101 will be 1,200 in electricity, 1,000 in indirect labor, and 4,000 in insurance. So here are the questions. What is the allocated overhead for Job 101? Well, if we follow these first 3 steps, we can get this answer. So if you remember on the step 1 here, we need to identify your overhead allocation base. Now they say that they feel direct labor hours drives overhead. So there it is. So we know that we're going to use the estimated hours starting out, which is 80,000 hours. Now from there, let's go ahead and calculate your predetermined overhead rate by using your estimated overhead cost divided by estimated allocation base. So again, the allocation base in this problem will be direct labor hours. I gave you machine hours as well, but you can ignore that. So once again, estimated overhead cost divided by estimated allocation base. So let's go ahead and take our cost, which is going to be $200,000 estimated divided by 80,000 direct labor hours. So our predetermined rate will be $2.50 per direct labor hour. From there, we can go to step 3, calculate allocated overhead. Take your predetermined overhead rate times your actual allocation base. So $2.50 per direct labor hour times your actual labor hours. If we notice here, Job 101 has 2,400 direct labor hours. So multiply that out. $6,000. So for Job 101, our allocated overhead is $6,000. Question 2 is asking if there is a variance, or is there a variance? If so, how much? Well, to get the variance, you just take your actual overhead minus your allocated. And that would be step 4 on our left there. So, actual overhead, they tell us it's 1,200 in electricity, 1,000 in indirect labor, and 4,000 in insurance. So that comes out to be about $6,200 minus 6,000. Variance equals $200. And since our actual was greater than our allocated, we underallocated it by 200. Then it asks, does cost of goods sold need to be adjusted? Well, if you remember on the left here, overallocated overhead you subtract from cost of goods sold, underallocated you add. So on the right side here, we determined that it is underallocated by $200. So you will add that to cost of goods sold. $200 plus cost of goods sold. And cost of goods sold was $22,000. So adjusted cost of goods sold equals $22,200. And that's it. So once again, if you follow those 5 steps, you can get to the answer. It makes it a lot easier. You know what to identify, what not to use to calculate allocated overhead, get any type of overhead variance, and then adjust cost of goods sold if necessary. Hopefully this was helpful for y'all today. Once again, my name is Nathan. You can find me here at this link. I go by Nathan G for Chegg Tutoring. So find me there. Send me a message if you need some help with homework, exam prep, or just one-on-one tutoring. I'd be happy to help you out. Thanks again for listening, and I'll see you in the next video.